Hello everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 10th of September 2021, and I'm recording this video at 2:51 PM Eastern Standard Time, just a little bit before New York closes. Elliott Wave analysis first, classic analysis last as per usual. A quick look at the monthly chart just to orient ourselves. US oil I expect is in a bull market, and I've expected it's been in a bull market for over a year. From this high to this low, supercycle wave 2 looks like it's complete, and it subdivides as an Elliott wave double zigzag, which is a pretty common corrective structure. Cycle W subdivides as a simple A, B, C zigzag. X, a joining structure in the opposite direction. Cycle X is labelled as a zigzag, A, B, C, and then Y completes as a second zigzag to deepen the correction. The whole structure has a downward slope, as a double zigzag should. If supercycle 2 is over there, then that's where a third wave should have begun, and a core Elliott wave rule is grand supercycle 3, not grand, just supercycle 3, must move above the end of supercycle 1 at this high back here, and it must move far enough above that point to allow room for supercycle wave 4 to unfold and remain above first wave price territory. Supercycle 3 itself may only subdivide as a zigzag, and within it, cycle wave 1 should last from 1 to several years, and it looks like it's unfolding as an impulse, at primary degree to be labelled 1, 2, 3, 4, 5. I have two Elliott wave counts at lower time frames. The first one follows this labelling and expects that primary 4 is over at this low, and that has a pretty good look at the monthly chart level. And the second one considers the possibility primary 4 could move sideways before it's over. Let's take a look at the weekly chart, where this high for primary wave 1 is this point up here. We're now zooming in on the beginning of supercycle 3 with primary 1, 2, 3, 4 and 5. I've shown these price points to show you where primary wave 3 begins and ends, because on the daily chart this is where I've drawn the Fibonacci retracement along the length of primary wave 3. You can't see the beginning of it on the daily chart, and someone asked about that in comments this week. So these are the points I'm drawing the Fibonacci retracement from. My main wave count will expect that primary wave 4 is most likely over at the last low for oil, but we have to accept the possibility it could continue further, and if it does, it may not move into primary wave 1 price territory below 43.77. The target for primary wave 5 is for it to reach equality in length with primary wave 1 at 95.38. That's the most common ratio for a fifth wave to exhibit, and so the target should have a reasonable probability. Let's take a look at the first daily chart, where primary 3, this high at 76.97, is this point up here. Now we're zooming in on the structure of primary wave 4, a double zigzag, W, X, Y with a clear downward slope, and the subdivisions all look really good. If primary wave 4 is over there, it has reasonably good proportion to primary wave 2, and as you saw on the monthly chart, they both show up quite clearly. It looks like primary 4 could be over there. If it is, then primary 5 should be underway, and within it, intermediate wave 1 may be incomplete. Minor wave 1 within intermediate 1 may be over at this high here, and minor wave 2 could be continuing lower as an expanded flat to be labelled A, B, C, subdividing 3, 3, 5. Minute wave C would be expected to move at least slightly below the end of A to avoid a truncation. The target would see it do that at 64.09. Minute C would reach 2.618, the length of minute wave A. I would not want to label minor wave 2 over here. I did try and consider that possibility. It would have to be labelled as some kind of combination, possibly with a running flat in there, and I'm struggling to see how that would fit. I'd rather label it as an incomplete expanded flat, but if we do see a breach of the upper edge of this channel early next week, and if this wave count, or at least the labelling of minor wave 2 is incomplete, if that's wrong, then we should have that proven to us on Monday or Tuesday. If Monday or Tuesday do see price move above and close above the upper edge of this channel with upward movement, not just a little sideways day, it should be a decent upward day. If that happens, I'd label minor wave 2 over here, and I'd probably consider it as some kind of combination, maybe W, X, Y. That would be possible. But for now, let's consider the possibility it's going to see a deeper pullback, and it may not move beyond the start of 1 below 61.74. It's also the same to this point here, and then alternatively, this alternate wave count considers the possibility that primary wave 4 may not be over and may be continuing sideways as a triangle or a flat correction. Within a triangle, we'd have A, B, C, D, E moving sideways in an ever-decreasing range, and there would be no minimum requirement for B of a triangle. Within a flat correction, we would have A, B, C, and there is a minimum requirement for intermediate B within a flat. It must reach 0.9 the length of intermediate A at 75.47. There is a common range for a B wave within a flat from 1 to 1.38 times the length of the A wave at 76.97 to 82.68. And so notice that B can make a new price extreme beyond the start of A, as in an expanded flat. A new high above here doesn't mean that primary 4 has to be over. We would use classic technical analysis techniques to identify a B wave. There should be something wrong or off about B waves. They should exhibit weakness, particularly in volume and momentum, may exhibit some bearish divergence between price and RSI or price and stochastics. So if we do see a new high above this point for oil, then I would consider discarding this wave count if there is strength in upward movement, but if there is weakness, I may continue to keep it. Okay, classic analysis now, just weekly and daily charts. This week, at the end of the month, I will again go over the monthly chart with you. This last two candlesticks, weekly candlesticks, this one here is just an hour and a half away from completing, but it's got weaker volume and it's an inside week so far, and so unless we see something dramatic happen in the last hour of trading for the week, it's probably going to continue to be the same. This looks like a little consolidation or a sideways movement, and it doesn't look convincingly like part of a new upward trend. This bullish engulfing candlestick pattern lacked support from volume, so at the weekly chart level we can't have confidence in it. But I did take some time last week to look over early movements within a new bull market for oil, and actually it does exhibit weakness early on, similar to cryptocurrencies. It's another weird feature of cryptocurrencies. Oil seems to exhibit that as well. And so just because this lacks support from volume doesn't mean the pullback isn't over. Just because the bullish engulfing candlestick lacks support from volume doesn't mean an upward trend isn't resuming. ADX reached it reached extreme for the prior upward trend. It's now been pulled right down, but it's not below both DX lines yet, so if an upward trend does resume, it would still be considered extreme. On balance, volume this week gives us a weak, or not too weak, it gives us a bullish signal. This trend line is almost horizontal and it has 3 tests, so not too many tests. It's not too long held, but it has virtually no slope. So this bullish signal has some technical significance, and that would tend to support either the idea that minor 2 was over here, or the alternate daily Elliott wave count. RSI has been brought well down into neutral territory. There is plenty of room for an upward or downward trend to develop, and stochastics is also neutral. At the daily chart level, it looks like there may be a little pennant pattern forming, although the trend lines don't really converge as much as I would prefer for a good pennant. Pennant patterns are akin to Elliott wave triangles at lower degrees. They are always continuation patterns, and so I've given you a target in the text article. It is, 78.40. If we see a break above the upper edge of the pennant trend lines with a close above this line, on an upward day, which must have support from volume for confidence, if that happens, then use that target, 78.40. That's calculated from the flagpole of the pennant. But if price breaks down below the lower edge of the pennant, then the pennant has failed. We discard the target, we discard the idea of a pennant pattern, and volume suggests it may actually fail. This is quite a strong volume for this last completed downward session, and this suggests that we may be about to get a downward breakout. On balance, volume also for the short term breaks below support, giving us a weak bearish signal. This is a pretty weak signal though. This trend line only has the 2 required anchor points you need to draw a trend line, so it doesn't have good technical significance. But that in conjunction with volume makes me suspect that the main Elliott wave count may be correct, and this is pretty much, and the Elliott wave structure is pretty much why I have that main Elliott wave count that expects a pullback before the upward trend resumes. RSI well in neutral territory, plenty of room for price to move higher or lower. ADX indicating no clear trend. At the daily chart level, the ADX line has been pulled back below both DX lines. There is room now for a new trend in either direction to develop. ATR declining as price moves sideways, stochastics returning to neutral, and MACD bullish. That's all from me this week with your oil analysis, and I hope that all of our members are looking forward to a fabulous weekend.